As global capital flows are distorted by a strong US dollar and structural barriers challenge growth, can Nigeria defy the odds and lead Africa's economic resurgence in 2025? Good morning. It's another power-packed episode of Business Week. This week, Tesla accelerates into the future as relaxed regulations spark a 7% stock rally, and Bitcoin flirts with $100,000 in a stunning rally. Closer to home here, the IMF commends Nigeria's bold economic reforms, even as the country's debt servicing costs are set to surpass capital spending by 2025. And in a pivotal moment for Africa, on the global stage, South Africa takes the reins of the G20 presidency. And later on, we explore whether Nigeria can lead Africa's economic future in 2025. From record-breaking earnings to policy shakeups, there's plenty to unpack right here on Business Week. I'm Rolake Akinkuwe-Filani, helping you catch up if you missed out during the week. Stay tuned. Okay, first of all, we'll take a look at global energy commodities. Brent is back up in the bullish terrain. Well, that's after escalation in tensions between Russia and Ukraine. Of course, missiles fired back and forth during the week, escalating tensions, and the International Criminal Court issues an arrest warrant for Israeli Prime Minister Benjamin Netanyahu. That fact might actually rattle markets there. WTI crude in North America was up by 1.24%. Natural gas was down by 7.6%, and RBOB gasoline was up by 0.14%. Let's take a look at equities markets from around the world. First, of course, as always, we start with Nigeria. A fairly muted tone on the stock markets at the end of trading on Friday. The all-share index in Lagos here ended the week at 97,829.02 points, down by 0.23%. Deals, 9,677. Not bad, but the volume of shares traded was a paltry 366.62 million shares. And the value of those shares was 6.06 billion naira, with market cap closing the week at 59.29 trillion naira. Let's take a look at equities markets from Africa. Well, it's a clean sweep of green. Not bad there. Joburg, Ghana, actually, Accra leading the charge. A big pull up on the market. There was Enterprise Gold, an ETF, new gold enterprise fund set up by APSA, helping to boost the market there. And of course, MTN Ghana did pretty well in the past week. Nairobi was up as well by 0.03%. And Casablanca in Morocco was up by 0.12%. Let's take a look at Europe. Well, the Euro Stoxx all-share index, positive terrain and pulling all the other indices up throughout the week. Euro Stoxx 600 closed the week at 1.12%. FTSE was also up by 1.35%. DAX in Germany was up by 0.77%. And CAC 40 in Paris also did pretty well. Good news there. Anticipation that rates might be put on hold or might be cut by the ECB. I'll talk a bit more about the private sector index in Europe coming up later in the show. Now it's my top picks. The first story here is that Bitcoin has hit a crazy high, right? It was tracking $98,000 during the week. It's inching towards $100,000. Now, there's so many reasons why this is happening. Bitcoin has actually now really become mainstream. You have asset managers like BlackRock and Fidelity introducing Bitcoin-focused ETF, exchange-traded funds, which are also now being traded on stock exchanges. So the cryptocurrency is now really in the fully formal market. Institutional investors seem to love this alternative asset class, doing so well. And of course, notwithstanding, there's still a lot of volatility. You can see swings in Bitcoin trading in a single day of as high as 12%. So it's a highly volatile asset, notwithstanding the very, very bullish outlook there, thanks to institutional investor demand. Now, South Africa, in a welcome move for the African continent, finally assumes the presidency of the G20. That handover happened in Rio de Janeiro during the week. On Monday, of course, President Bola Ahmed Tinubu of Nigeria also attended that. But this is good news, right? Because Africa gets a more prominent voice and seat at the global negotiation table. Key issues that President Cyril Ramaphosa of South Africa will be tabling will be things like food security, agriculture, trade. So this is a really welcome boost for the African continent. Of course, we know that Africa has been represented in the G20 via the AU. Now we're seeing a major Africa economy come to take the leadership of the G20 summit. So we expect more equity, an amplified voice for Africa at the table, better terms in terms of things like debt relief, trade negotiations, and of course, economic and trade partnerships. Let's look at what else is there. Eurozone private sector unexpectedly slips into contraction. Now, the key index to watch here is the Purchasing Managers Index, which fell to about 48 from about 49 in the previous month. Now, still concerns around the labor market in the Eurozone. Germany and France were the biggest drags on in terms of that manufacturing index, actually. Concerns still around energy prices. Although inflation has slowed down, there's still concerns around that. And now, I think part of the real feeler here from the market is that perhaps the European Central Bank may have overdone it with its rate tightening move. So we might see a hold on rates during the next cycle of cuts or easing or hold. So Eurozone private sector activity, not so great. What will this mean for the next round of monetary policy decision moves? Well, we'll keep an eye on that. South Africa, again, good news there for the South Africans. They assumed the G20. Now, inflation is at a 4-year low. Not since COVID 2020 has inflation in South Africa come down to 3.2%. That was the last reading. This is good news for the South African economy, although unemployment is still at 32%. But the slowdown in inflation has actually been triggered by the slowdown in food inflation and, of course, energy inflation, no thanks to the slight lull in global oil prices, which have positively impacted those who are net importers of energy and energy products like fuel and petrol, South Africa being one of them. So good news for South Africa's inflation figures. Let's see what that will mean for the South Africa Reserve Bank coming into the next cycle. And finally, Zimbabwe. Power tariff increases have actually led to a $1.8 billion inflow in investments. That's according to the National Electricity Regulator in Zimbabwe. The country is looking to add up to 3,000 megawatts, additional megawatts. Mostly around 65% of that will come from wind and energy. But according to the czar of the electricity regulator, the hike in tariffs were hiked by 30%, and that led to a significant inflow of foreign investment into the country in the last few months. Is that a book whose leaf we want to borrow from for the rest of Africa? Well, we'll see. Of course, tariffs are not the sole driver of investment, but investment viability are really key. So South African electricity market, Zimbabwean electricity market is looking much more attractive to investors. Nevertheless, the country has demand of almost 3,000 megawatts, but is only currently able to do a little over 1,800 megawatts. So still a lot more room for improvement, but good news there for the Zimbabwean economy. That's it for my top picks.